Hey there, Josh here from Time Investment Company, and today I'm going to talk about what to consider when choosing a third-party lender to partner with. With many organizations offering similar services, it's hard to understand which one works best with your budget and your goals. And I've seen many cases of owners who had been working with big lenders for years and had no idea that they could be getting more deals and growing faster until they learned about the variety of lender options out there. But honestly, I don't blame them. There's not a lot of information out there directed to inform business owners in the home improvement and water treatment industries specifically about consumer finance programs. Through this video, I'm hoping to give you an overview of things you need to consider when looking for third-party financing, or to at least evaluate your current partnership. Well, the first thing most people ask about is price and interest rates. And these are super important, of course. But apart from these, companies can vary widely in other ways that have a direct impact on the bottom line too. When looking for your ideal lender, you should consider whether they are ultimately committed to your niche and offer tailored programs to your industry. Whether they make the application process easy, whether they make the fast credit decisions, if they approve a wide range of credit profiles, if they have a skilled and capable customer care department to deal with your clients, and how fast they release funds. So lots of things here. It seems like a lot to ponder too, right? But believe me, there are organizations out there that will check all of these boxes for you. Now let's dive a little deeper into each one of these points so you know what exactly you're looking for when it comes to evaluating consumer finance options. Okay, so the first thing, does a company commit to your niche and offer programs tailored to your industry? Industry specialists are better partners than generalists. In the long run, vendors tend to have a better experience with finance companies that are committed to remaining in their industry rather than one that does just general financing. Furthermore, finance companies that concentrate on your specific industry or niche have a vested interest in your success and the success of others just like you. If they get a significant fraction of their business from financing water filtration systems, for example, they will work hard to maintain their reputation among water filtration system distributors. They know that dealers and salespeople in your niche talk to each other. You see each other at trade shows and lunches, maybe all the time. And if your finance company is committed to your industry, you can be much more confident that they will work with you to resolve any of the inevitable little problems that will come up. For a generalist, it's too easy just to walk away from any specific customer, niche, or distributor. Also, industry-specific customer financing companies can and do tailor their financing options to suit your business. If your typical install is, let's say, $8,000, it does you no good to use a financing company that won't approve more than $3,000. You want one that understands your typical $8,000 price and understands that it's reasonable and fair for your industry. You also want a financing company that won't flag an $8,000 loan application for extra scrutiny or make good customers jump through a lot of needless hoops in order to get approved. They'll get the information they need to underwrite the deal upfront on the application. And they expect to finance $8,000, $10,000, or even more. In fact, the right financing partner for you should welcome your larger deals, not make things more difficult for you. And the second aspect to consider is whether the company makes it easy for your salespeople to get a credit application filled. Paper applications are simply out of date. Today's customers want and expect fast processes. They're accustomed to filling out online applications and accustomed to getting a credit decision in seconds. So make sure to choose a consumer finance company that makes it possible for you to get a credit application filled out on the spot, right at the sales appointment. That leads me to consideration number 3. Do they make quick credit decisions? Delays give the customer a chance to put it off until tomorrow, or shop the deal around, or just plain change their minds. In any case, any delay or complication in the credit application process risks costing you a sale. This must be an automatic process that would only require a second look, aka a human look, if the customer doesn't quite meet the credit score standards. And in that case, they would put a human underwriter on the case, apply some common sense, and possibly approve the loan. Or maybe approve a smaller amount or apply a special interest rate. And I'll talk more about this manual process in just a bit. But any of these is better for your customer and your firm's reputation than outright rejection. No finance company can or should approve everybody. But in general, the best finance company for you is one that looks for a way to say yes to your applications. So ask how they evaluate customers' credit scores. Bank lenders, for example, are notorious for accepting only the best credit profiles. They have stockholders and regulators that restrict them from taking on anything less than very good credit. In the real world, though, you need to be able to do business with all credit types. Many good people have suffered some credit dings in the last few years, especially with things like the pandemic or economic variables simply outside of their control. Having customers rejected not only means less business for you, but also ends up affecting your brand image. Even though you will have nothing to do with the lender's decision, customers end up associating the rejection with your company and then are less likely to contact you again to do business later. And when the time comes, they look for another vendor, so one who can find a way to approve them. And the best consumer finance company for you has programs and a path to approval for all your potential customers, even ones with fair or marginal credit histories. Any finance company can look good with an A on paper, but lots of customers with, let's say, B, C, or even a D on paper are going to suffer, and those may be a lot of your customers. And these can be great prospects and still great customers for you, but they've suffered some temporary setback and they've had their credit score affected on paper. That's where manual underwriting comes in. That's a process of getting a human set of eyes to look at the application that doesn't quite meet the initial criteria. A human underwriter can assess factors that don't quite show up on a FICO score. Often the human underwriter can find a way to say yes. So you want to make sure that your choice of consumer finance partner can get a human underwriter to look at the application and make a decision. If they can't approve the loan, then the manual underwriter can give your salesperson and prospect some feedback and guidance about how the deal can get approved in the future. For example, the customer may need to put down more upfront, pay off some delinquencies, or lower their current debt to income ratio. If the customer can make that happen, the finance company should welcome a reapplication in the near future. And question number 5 to ask is, how will they treat your customers? Remember that rightly or wrongly, your customers will associate their experience with the lender, with you, and your company. Going with the wrong finance company can damage your reputation. Instead, you want to partner with customer financing businesses that help make your offerings affordable, offer a choice of terms that fit your customers' needs, and charge your customers an interest rate that is reasonable and fair. Collection practices should be reasonable even if the customer falls behind on the payments. And the finance company must follow all applicable credit collection laws. They should not harass or threaten customers. And I've seen this before, and it just leads to terrible outcomes. And it might sound obvious, but believe me, it's not uncommon. They should have a trained and professional collection staff ready to answer questions and provide support. Otherwise, their bad practices will come back to affect your reputations as a merchant. So, how fast do they release funds is another big question. Cash flow is the lifeblood of your business, and good lenders understand that. They also understand that as soon as you take on a new customer, then you have fulfillment costs. You may have to buy materials, pay deposits, pay workers, installers, subcontractors, make truck arrangements to get your workers and materials where they need to go, and even other upfront costs. In the past, sellers had to wait days or even weeks to get their funding from a finance company. Today, the standard is in minutes. As soon as a customer confirms the purchase of your goods or services, your finance company should release the funds to you right away. And there's no need to wait to get the capital in your account, so you can put it to work. With that said, there is no formula or one-size-fits-all solution when it comes to the right third-party finance company. After all, each one of your customers has a financial profile. For some of them, the type of the credit available is important. For others, interest rates may be a deal breaker. But if you're unsure, I recommend going with a consumer finance company that offers flexible finance plans. Flexible financing offers a range of repayment periods that can be tailored and adjusted according to your needs. For home improvement businesses, that tends to work really well. And there we have it. I hope this video gave you a good overview of the main considerations to make when evaluating your current lender or when looking for a new financing partner. And if you have any questions, feel free to start a conversation in the comment section below this video. And if you feel like you learned something from this video, then make sure to go ahead and like it, subscribe to our channel so you can get more videos and more great content on how to perfect the consumer financing process so you can really help your customers out. And I'll go ahead and see you on some of our following videos. Cheers.